I once knew two guys who made almost the same salary. One drove a leased BMW, ate out 4 nights a week, and was 2 paychecks away from broke. The other drove a 10-year-old Honda, packed his lunch every day, and quietly had $500,000 sitting in the bank, same income. Completely different lives. The difference wasn't how much they earned, it was how much they kept, and that's really what this video is about. Your paycheck is a number other people see. Your net worth is the number that actually decides your future. So let's break down why one matters so much more than the other. Everything you own minus everything you owe. Your savings, your investments, your home equity, your retirement accounts, that's your assets, your credit card balances, your car loan, your student loans, your mortgage, that's your liabilities. Subtract one from the other and you get the real scorecard of your financial life. Not your job title, not your salary, the actual number. We're wired to focus on paycheck because it's visible, immediate, and social. People ask, what do you make, all the time. Nobody ever asks, what's your net worth? But a paycheck is a flow. It comes in and for most people it goes right back out just as fast. Net worth is a stock. It's what's left standing after that flow passes through. And that leftover amount is the number compounding actually works on. It's the number that grows on its own, whether you're working or not. Here's a simple example of how this plays out. Say you get a raise from $60,000 a year to $80,000. That feels great, but if your spending rises right along with it, a nicer apartment, a nicer car, more takeout, more subscriptions, your net worth doesn't move an inch. You're earning more and keeping exactly the same amount extra. Nothing. This is called lifestyle creep, and it's the single biggest reason so many high earners still feel financially stuck no matter how many raises they get. Now flip the example around. Someone earning $45,000 a year, who saves and invests consistently, avoids high-interest debt, and lives a little below their means can end up with a bigger net worth in 10 years than someone earning double who spends almost everything. This isn't just a hypothetical. It's the entire premise behind research on actual American millionaires, which repeatedly finds that many of them live in modest homes and drive ordinary cars. Income didn't make them wealthy. Behavior did. Specifically, the habit of keeping the gap between what they earned and what they spent as wide as possible. Let's put some real numbers to this. Imagine person A earns $90,000 a year but only saves 5% of it. Person B earns $55,000 but saves 20%. Over 10 years, assuming a modest 7% average annual return, person B ends up with a larger net worth than person A, despite earning nearly 40% less every single year. Savings rate beats salary size almost every time, because savings rate is what actually gets invested and compounded, and salary size on its own does nothing if it's all spent. Here's the part that really matters long term. You don't retire on your salary. You retire on your net worth. The day your paycheck stops, the only thing left paying your bills is whatever you've built up in assets. A high salary with nothing saved means a hard, sudden stop the moment you leave work. A modest salary paired with a strong net worth means options. The option to retire early, the option to change careers without panic, the option to actually sleep at night instead of running numbers in your head at 2 a.m. There's another reason net worth matters more than a paycheck. It compounds on its own. A paycheck doesn't grow itself. You have to keep showing up to your job to get the next one. But net worth, once it's invested, keeps working whether you show up or not. Dividends reinvest automatically. Interest compounds in the background. Home equity builds quietly every month you make a payment. Your money starts doing some of the work your paycheck used to have to do all by itself. This is also why people who only track their income tend to miss the leak in their finances. You can make 6 figures a year and still have a negative net worth if debt is piling up faster than your assets are growing. That's not really an income problem. That's a net worth blind spot. And it's the quiet reason so many high earners feel broke despite what looks, on paper, like a great salary.
So how do you actually start paying attention to this number instead of just your paycheck? It doesn't need to be complicated.
Once a month, list out everything you cash, investments, retirement accounts, the estimated value of your home if you have one. Then list everything you owe, credit cards, loans, your mortgage balance. Subtract the second list from the first. Write that number down. Do this every single month and you stop guessing about your financial progress. You start actually measuring it. This is really a habit more than a one-time exercise. The number itself will bounce around from month to month. Markets dip, big unexpected expenses come up, that's completely normal. What actually matters is the trend over a full year, not the small wiggle from one month to the next. People who track their net worth consistently tend to make noticeably better financial decisions almost automatically because they can see the real impact of a big purchase or a new savings habit within weeks instead of years. Now, I know what some of you are thinking. I don't make enough money to build meaningful net worth right now. And that's a completely fair point. Building net worth is genuinely harder when your income is tight. But even small, consistent amounts matter far more than most people expect. Contributing 5% instead of 0% to a retirement account, or paying down high-interest debt just a little faster each month, moves that number in the right direction. Net worth isn't only a game for high earners. It's for anyone willing to track the actual gap between what they own and what they owe, and to keep working on widening that gap over time. So the next time you catch yourself comparing paychecks with a friend or a coworker, remember those two guys from the beginning of this video. One had the bigger number showing up on paper every 2 weeks. The other had the bigger number that actually mattered 10 years later. Your paycheck tells other people what you earn. Your net worth tells you what you've actually built. And if you want to start tracking your own, all it takes is one spreadsheet and 10 minutes a month. If this changed the way you think about your own finances even a little, that's the whole point of this channel. Building the small, consistent habits that move the number that actually counts.